All right. As we continue with our ratios, we've looked at liquidity, we've looked at risk, we've looked at profitability. The next question that you can get, they can ask you on markup. Okay, and they say, is the business reached its intended markup? Now, when you're talking about markup, you're going to use the markup ratio, right? What you call the markup ratio or the markup. The markup ratio is your gross profit on cost of sales times 100, and this answer comes as a percentage. It's gross profit on cost of sales, and the answer comes as a percentage. So what are we saying? Your markup actually determines the selling price that you're going to sell your product for. And further to this, in addition to maybe, okay, what you should do there when you're commenting, you need to compare your achieved markup versus your intended. So normally they will give you and tell you that the business uses a markup of, let's say they use a markup of 60%, right? And then you calculate here, and let's say you get 49%. Now, so when you're commenting, you're going to say the business intends to make a markup of 60%, but they only managed to achieve 49%. In other words, the business did not reach its intended markup. Now, as a follow-up, they can sometimes ask you, why is the business not reaching its intended markup? Okay, so if they say, why did the business not reach its intended markup? There are a couple of reasons why not. Number one, it could be if the business is giving excessive discounts, right? If the business is giving excessive discounts, they cannot reach intended markup. Number two, maybe seasonal promotions. What does it mean? Sometimes they can say buy 4, get 1 for free. You will not reach intended markup. Then poor quality stock. Poor quality stock can result in a scenario where you have to reduce the price of the product. So obviously you will not reach your intended markup. Or it could be errors in marking stock price. In marking stock prices. So what we are saying is that the business may reach intended markup, may exceed intended markup, or the business may not reach intended markup. If they don't reach intended markup, they can ask you and say, why will the business not reach intended markup? Maybe the business is giving too much discounts, resulting obviously in them not reaching intended markup or reaching the target price. Or they could be having a seasonal promotion, buy 4 get 1 for free. The one that they give you for free, it means it's going to affect the average price of all the 4 that you've been able to obtain. And then if there's a poor quality stock, this will result in the business being forced to sell at a cheaper price because they want to get rid of the stock. And then errors in marking price. This is a pure human error when someone can make a mistake of marking that, and it will result in the business not reaching its intended markup.